All right, my bad, Joe. I gotta add a mic to that scene.
Hello, Mr. Dbloc.
Hello, bro.
Can I ask you? Uh, nice. I woke up now and my first thing is open the market. And by the way, happy birthday to you. Little bit later, but yeah, I'm wishing you very big pleasure of your life and big thankfuls about what you're doing to us.
I appreciate you, brother. Definitely appreciate the kind words.
Yeah. So can I ask you one question about one coin? If if there is a stopping volume candle on 1 hour time frame,
Yeah, what are you
it
looking
is
at?
Dgo Dgo USDT.
D girl?
DEGO.
Oh, devil. Okay.
No V. G.
G. Go.
GO.
I haven't heard of this. Oh boy. Low market cap, I'm guessing, right? These liquidity sweeps have been pretty ugly. On the hourly, you would need this. You would need this candle to close first of all, right? To be sure. Right now, yes. If it closed like this, it's a stopping volume candle after a large wick, which is pretty interesting because if we go back, we see right after every drop, for the most part, once you recover, there doesn't seem to be a secondary drop. But I would let it close, let the candle close, or go down on smaller time frame for confirmation. How much time is left? 20 minutes. Yeah. I know nothing about this coin though. I really don't like these sell-offs. I'll be honest with you though. Like every pump that it's had has been sold off pretty aggressively. But where there's volatility, there's money. Yeah, just be careful, right? On the macro, you broke structure here. So at least you know that if that does hold, you're at support, right? So you'd be putting that right into support. Same support that created that wreck. Held once, held twice. Yeah, looks interesting.
It is making it 3 times by the support. Maybe it should go up.
I mean, I don't really like to follow that rule per se, but I do like to watch the volume, right? So
Yeah.
every time that this has recovered,
Mm.
right? And I mean like every time. If we go down to the bottommost wick, right? You got the highest bit of volume there. Bottommost wick, highest bit of volume.
Yeah, right. But
Bottommost wick.
isn't it now making a W there on the,
Yeah, but
or this can be considered as the?
yeah, but this is so volatile that I mean, you got to be careful with patterns on this. Somebody's actively playing with this, right? And we always talk about it. Like your TA could be perfect, but if somebody decides to drop a massive bag, I mean, it looks good. Me personally, I'd be waiting for that candle to close just to get confirmation. Right, you're already sort of consuming yourself. So as it stands, it's a bit of an indecision candle. But let's say the candle was to close right here, right now. Right? Even if it went red, if it was still a stopping volume candle, I would drop a line where the body of that candle ended. And then I would wait for a bullish engulfing follow-up candle. Once I saw it bullish engulf, then I would jump in and just use that line as my invalidation. But again, you need the candle to close. Still got 16 minutes. Right, this thing could get that liquidity easy in the next 16 minutes.
Yep, understood. Thank you so much.
Yeah. I mean, it's gonna benefit if Bitcoin continues to move. Obviously, everything will. Let's see if Bitcoin gets this popular. Then I'll look at some more alts because honestly, that's all that matters right now. Bitcoin starts to
because now
retrace, dominance is gonna go up, and then it's gonna be TP time across some alts. Yeah, we could get it, Soto. At least target 2. But with that vector right there, the only thing is there's not a lot of liquidity. But if we get some FOMO here through target 2, target 3 should be easy. What's going on, Pip? Let's go down to the 5. Just to rewind to yesterday when we had that pump. Remember I was saying we've come down to the 50% of the vector. If we're still bullish, that'll be enough for market maker. Right, and that's exactly what we got. Came up, tested that 50, popped out. The only time we retraced was to come back down and lock in this range. Right? Turn resistance into support. Gone again. We talked about on the larger time frames. You guys remember when we were talking about the range, right? And what do I always tell you guys about range trading? When you pop out of the range, right, you can label that entire move a deviation only when price is accepted back into the range and hold support, not before. Right, so price came back into the range here, but it didn't hold support, fell through. Again, we pumped, came back, didn't hold support. Here, got choppy, we didn't hold support until right here. Right, and what did I say when we put in that W? I said if this support holds, we target the top of the range. And it's exactly what we got. So far, everything is working according to plan. Splendidly. I also spent the last 3 months saying that my birthday was going to be a time to make good decisions, to ignore the noise. And we had plenty of noise. We had plenty of noise. I don't see a lot of bears in here LOLing, crying, laughing faces, have fun being poors, and all of that shit that they were coming in here with for the last 3 weeks. It's kind of quiet. But we're definitely not out of hot water yet.
So making good decisions. Are you talking about trading or life in general?
Just general, bro. Honestly. That's just a rule of thumb. If it's close to my birthday, just try as hard as you can to make good choices. Use it like how people use New Year's. New Year's comes along and people are like, I'm going to be a better person. Gonna start going to the gym every day. I'm gonna stop
January 10th, it's all
cursing.
done.
Yeah. The funniest thing is watching those New Year's people at the gym fade out slowly week after week. January 1st, the gym is packed. January 7th, still packed, you know. A lot of grunts and groans and shit. By the middle of the month, beginning of February, the shit is a ghost town again.
Tumbleweeds rolling through the weight room.
Mm-hmm. That's how I like it, bro. I like an empty gym. Love that shit. The worst time for the gym in Miami is right before summertime. Everybody trying to get that summer body back. Yeah, they got all the gym gear, headbands, wristbands. Everything all matchy. Their sports, their pre-workout bottle matches the outfit every day. Been planning for this shit all year. There's no way to identify it until Monday night. Rajesh could always go higher on a false move into Monday. Yo, I swear I could be on here all day answering questions and shit, and like 4 hours with my family is just exhausting. Yeah, I mean, for me, with Jess, it's just a matter of pulling my stops up above prior supports and locking gains, right? Just riding the wave. It's possible, Yoel. We could possibly fill that CME gap on our 3-day retracement. Remember, like I said, we're not out of hot water yet, right? And the trend is your friend to the end. So all we achieve by this is getting back into this range. Right. So it wouldn't be unheard of to pop out, deviate, come back into the range, take CME gap. But I'll give you a good example of, let's go to the 4 hour. Chart's gonna get messy here for a second because we're gonna zoom way out. This range right here was a massive CME gap that we left. Right? This was our ignore all the noise, don't fuck it up zone. We ended up popping up above that CME gap. 25%. Right? 26%. from the top of the CME gap. And we didn't fully fill it for 178 days, 187 days, right? Let's just assume we do the same thing here. And this CME gap is way smaller than that CME gap was, right? That CME gap was massive. Now, I'm not saying this is going to happen. My point of saying this is that we don't even need this to happen. Let's say we leave that CME gap and we pop up 26%. We're at $1.50. Right? And let's say that it takes half as many days to cover instead of 178 days or whatever, right? Let's say it only takes 60, 70 days. We're in January. Right? So again, I fully expect if we don't continue to push that we could come down and grab that CME gap. But we have definitely pumped harder and avoided closing the CME gap longer than we need to get to our targets. Right? We could pop up, get to 150, and then close that CME gap on the way down in January or some shit. And it not be strange or it not be, you know, unheard of. So all possibilities are still on the table here for that. Yeah, it's possible. 150 is where I start the TP. Whatever blow off top we get after that. But I guarantee you one thing, I will be getting at the very least 150 for my shit. I'm not riding it up to 150 and giving back 30% before I make my decision. Remember one thing, y'all. I have different risk tolerance than y'all. I have way different entries than y'all. Right? So it makes sense that I hit my targets before some of you do. And I'm not saying that to be like me. I'm saying it to mean like there's a whole class of traders that don't need more than 150. Right? 150 gives you a straight 10x on 15K Bitcoin. And 10x on Bitcoin for doing nothing but sitting in it, that's good enough for me. And remember, like, my plan is to rotate into some alts after 150. So if I wait for Bitcoin to top out completely, then I'm going to be leaving some money on the table. Yeah, it's going to be interesting, to say the least. Somebody came in here the other day and said, Dbloc, you are the last bull on YouTube. And it almost felt like a slur. But I'll take that. It's your birthday, Aeon? Happy birthday. W mod. There's a lot of Scorpio babies in the chat.
What was the horn for?
It snuck up on you. I've been there before. M2's good. We're on the way up. Nah, Scorpios are the shit. You just don't want to cross one. But if you talk to us nice, we're pretty cool. Leos are cool too, as long as you let them feel like they're in charge. You gotta let Leos feel like every decision is a decision that they made. that whole leader thing. Leos are cool though. Congratulations, Ghost. Tread carefully. Alright, I think we're good now. Yeah, it was me. Just click live on the stream. I caught it. Well, it's still. Hold on. It's still tripping. Aster and XPL seeing some lows, yeah. Yeah, you got it, man. You got it. It's good when we get that day-to-day correlation on Bitcoin. Like, that always feels great, right? But we can't rely on that with M2 because we have seen periods of decorrelation without the overall direction changing, right? So I know it's nice when liquidity pops and then Bitcoin pops on the same day, but yeah, try not to get too caught up with that. We are here. Get rid of that. Get rid of that. So it's the 27th. That means we're right here. Like, we're still on the run flat. We still have the whole increase ahead of us. Right? Well into our DCA zone. So you guys understand, like, why the DCA out on the 9th and the DCA back in late November. Right? We just saw it how it played out. DCA out on the 9th. Historical liquidation event on the 10th. Yeah, we just looked at it earlier, Rajesh. We're good there too. We're actually looking very good there. Definitely on the green path so far. The 50 EMA is now up at 1014. Yeah, Control Z works the best, but if you don't move away from the page. Hopefully this macro chart has made navigating these last couple weeks a little bit less scary. That was the whole purpose of it. Yeah, we just redid. I basically just redid that chart as a cleaner version. Discord's giving you issues, doggy? All right, so here's that chart, right? The only range that matters. So remember we talked about if we lost this range, right? Chances are we would come down to at least one. We thought we were out of the, when we made this move here, we thought that we were out of hot water. But coming down and breaking that range again, right, just lined us up for that move down that we didn't want. Right, came down, took us all the way down to 1 Now we've climbed back out of the range above the 50 and not quite yet above support. But it's basically the same as the other chart we were watching, right? Except the range that we're getting above on that chart is the top of this range because it's on the weekly. We go right here. This whole box there that says the only range that matters, that is the same as how'd the chart go? That's the same as the support resistance flip. Same box. So now hopefully the plan is to come after this vector. Right? Our measured move is 127 if we can pop above. So this vector right here would be our target. Wouldn't say it's a big drop, but there's a reduction in liquidity coming on Halloween, which is where I plan to TP. Right? But then on the 7th, we see our last big uptick in liquidity. What I want is an ETH all-time high by Halloween. I'm going to keep saying it until I gaslight Ethereum into doing it. Now, it's not just because I'm holding ETH and I want to make money. I want an ETH all-time high by Halloween so that these buys here go into alts. That would be the alt season. If we get the ETH all-time high. I mean, we'll know by then, Spark, right? Because if this isn't the last push, then we'll see global liquidity break these highs. But for right now, the way the chart stands, right, we don't want a future trip. We've got a double top and a lower high. Only thing bullish right now is that we're upticking here. But until we take out this high and we take out this high, in my opinion, the exit is here. Beginning of January. But for me, I will be taking heavier profits here, which is Christmas Eve, Christmas Day. Christmas Day, play a little bit of something here, right? So basically, let me future trip a little bit. That's what that'd be looking like. That's my plan for the next couple months. Obviously data dependent, right? I'm not moving deterministically just off the M2 chart. But if everything else is lining up and everything else looks good, then that's how I'm running it. I want to be completely clear that each progressive DCAN is going to be riskier and riskier. This one being the riskiest one, depending on what happens to M2 here. So this is just the way that I'm playing it. Like I said, I have a higher risk tolerance. But yeah. ETH all-time high is what, 49495? Remember when we were down, when we were falling out of this wedge on Ethereum, when we broke this candle and came all the way down is when I said ETH all-time high by Halloween. We have made a really good push since then. And this isn't like, oh, it's what I want. This is what we need for your alts that you're holding that you're not supposed to be holding yet, but you keep buying because you're not listening about being off rotation. They need Ethereum to make an all-time high before Halloween. If not, that means when November 7th rolls around, ETH is going to move, but the alts aren't going to move the way we want. ETH needs to lock in that all-time high so that it can knock dominance out of Bitcoin. The same way that this entire chart came down to the support holding, it's the same as the way up. Right? It all comes down to us being able to get back above that support. I just want to get this target too before bedtime. About that. Anybody have any objections? Good. Yep. It's definitely going to be a race. It's like the chart looks decent, but the time is going to be the problem. I'll tell you why it's going to be an issue, Mana. Watch, let's future trip this forward. Let's say we don't get there by Halloween. But ETH still makes a run for it. And then Halloween comes and we're here. And global liquidity starts to go down. And we double top instead of breaking all-time highs. That's not good. You feel what I'm saying? We really don't want that. Because that's just going to bring the bears out of the closet. They're going to say, well, that's all-time high. Now you double topped lower lows. Right? They're going to be shooting for the pits again. So that's why the timing of it is important. That's why I'm glad that we've sort of taken a fast trip. But we need to keep going. Yeah, we need a punch through. We need a punch through. What I would like to see is price come up, take all-time high, reject off that spider line, and then consolidate above all-time high. That's the key for the alts. That consolidation period is the signal for the next rotation of alts to go crazy.
Bit of a pumpernickel going on.
Yes, sir. Birthday
What's up, boys?
pump engaged.
Nice.
Not bad, Rick.
Nice
What are you up
looking
to?
rally. Oh, I just got home from work. Just sat down. See that it's just gone up the whole time. It's nice.
Man, it's not retail yet, in my opinion. We're gonna see retail pop back in above 120. Remember, what they look for is a sure thing, right? They don't want to come in while there's still any. We even got one toe in hot water yet. It's not until we sort of completely recover that they jump in and buy the tops, and then we retrace a bit. And then they're like, "Oh, I knew it was a scam. I never listened to my mother." And then we buy the dip on them. They're scared to buy that dip as well. And then they wait until we're above 140 before they jump back in. And then we TP and they play the whole thing over. Yeah, unfortunately. Not us, though. Yeah. Like, this group is definitely retail, but I'd like to think that we have shaken some of those retail habits. I've got all that Wagyu fat just sitting in my gut, bro. Like, that shit is so good on the way in, but I don't know if y'all know that feeling, but it's just too much. Way, way, way too heavy. That's what I think it is too, bro. Because I'll be honest with you, it was good, but that wasn't like Japanese Wagyu ground into. That was like probably like grade A American beef with a bunch of Wagyu tallow. If I had to guess, still good though. I know. What? I saw somebody throw up out of their nose on that hot chip challenge. I'm good. We should start doing some sub goals or something. 100K subs, I'll jump out of a plane. Live stream it. Nah, no parachute at all. Just held up by nothing but my aura. I was laughing because I saw somebody do it the other day. Kai did it on Mafiathon, and like 4 other streamers have done it since then. But the tech is crazy, bro. You can live stream the whole thing. Like legit live stream from in the plane to when you jump out, the entire way down, full audio. I don't know what tech they're using, bro. It's gotta be. It's gotta be Starlink. But they didn't lose connection once. Like shit didn't even lag. Yeah, nothing wrong with being a little safe. To get out of hot water, y'all, we gotta get back above 119.4. Right? That was the line in the sand that we screwed up. We said no weekly close underneath, that we open up the possibility for some lower numbers. So to reverse that, we need to get back above that range. I would expect some sort of pullback, y'all, because so just look at structure, right? If we pull back to CME after this range, that's what we'd be doing. Just to back up and show you so nobody freaks out if that actually happens. Right, what we'd be doing is coming down and hoping that this range that we've established here holds a support. And then the measured move from that, again, early to do this, but screw it. Why not be a little bullish? It is a bull market after all. New ATH. Target 8. Now, let's say we don't. Let's say we pump. Keep pumping from here. Same thing counts for above. Right? Even if we hit target 2, target 3, get a bunch of bullishness, that support that we broke is so important. And there's got to be so much liquidity trap that I don't expect to get above this on the first go. Right? First attempt. What I expect is on the first attempt to get rejected. On the second attempt, we pop. Right? So that can happen 2 different ways. If we pop from here and don't come back down to CME, the only thing I want to warn about is that that CME gap obviously is still going to be there. So if we end up coming all the way back up, then we're looking at a larger W. But again, I think it gets rejected on the first go. If that gets rejected, there is a good chance that we still come down to CME, which is going to be a move from 119 to 111. At this point, your job is going to be to ignore all the noise because the bear market's back at this point. You know, the bears will be back. They'll be laughing in the chat again. Just remember, right? Even if we don't get over, if we don't take this CME gap, it's going to be a target. And if we grab that CME gap and recover, then our measured move is substantially higher than the last one. And that, ladies and gentlemen, takes us just a bit closer to our guy 150. It's just money, Davy boy. Just money that's left on the table that they tend not to leave behind too many times. It would be the lower high that brings more people in my opinion, yeah. I almost rather get it done sooner than later, though. Which means target 2, CME, then we're gone. Right? Instead of pumping and building all of this sentiment just to have it scared the shit out of the market by coming down. But again, I just went over what happened. Some of y'all weren't here, so I'll do it again. Because this is also a possibility. If we just go back to the large CME gap that was left, because people keep asking, can't we leave CME for a long time? Yeah, we can. We've done it in the past. The one that sticks out is this range here. I'm way zoomed out, so just ignore the mess on the chart. You'll get my point in a second. So this was a large CME gap that we left, right? And we didn't recover it right away. So a lot of people were thinking, well, maybe we can leave it. And we did. I mean, we left it for a long time. We took chunks of it, but we didn't recover that for 187 days. Right? But what I want you to pay attention to is what happened once we left CME. So CME was underneath us here. Right? Bitcoin continued to pump. About 25% before it even turned around to worry about CME, right? And then it took 187 days to close CME. So there is a possibility. So you're saying there's a chance. No, I mean, there is historical sort of evidence, right, of this being a possibility. That we leave CME behind for right now, temporarily. It's only been a day, you know what I mean? We leave CME behind. If we were to pump that same 25%, see where that takes us? If we were to pump 25% from where we are right now, we hit target for the most part. Now, add the 170, not even 170 days, because we know the market is tight, right? Just add 70 days. Let's take a whole 100 off of the amount of days that it took to clear that. And say that it takes us 70 days to close CME. Takes us to January 5th. If we come look at the liquidity chart and see where January 5th brings us to the top of our range. Right? Again, I want to just be clear. The most probable outcome is that we close this CME gap on our next rejection. Right? But just to satisfy those people that say that CME gap doesn't have to clear immediately, and it doesn't, there is a path to get our all-time high, end the bull market, and close the CME gap on the way back down. Adam, what's going on, brother? I admire your conviction, Adam. I always tell people, no matter what they're trading, if you're going to take it serious, you have to build conviction. And if there's one thing I could say is that you have got incredible conviction when it comes to Adam. And that's what somebody that has conviction has, bro. Always has a reason. That's good. You need that. That's the only thing in the world that's going to let Adam drop to zero like it did and you still buy it, right? Like, if you don't have conviction, you would have definitely been shaken out. I know. I can imagine. We're gonna have to see how it plays out, man. I mean, dropping the way that we did is definitely gonna affect some all-time high possibilities for some coins because we dropped so late in the market, right? But we'll see. As soon as we're out of hot water, we'll get back into the business of looking for price targets on alts. Right now, be honest with you, I'm scared that if I give a price target on an alt that's off rotation, people are just gonna run and buy it too early and get wrecked. So I'd rather wait until it's, in my opinion, safe, and then we'll start looking at some upper targets. Yep. Patience, a healthy amount of risk tolerance, and as much conviction as you can muster about what you're holding. And I don't mean like go on Twitter and just drink the Kool-Aid, right? I mean like really go in there, question it. You know, come at it negative. The way that I find the strongest conviction is if I try to disprove something. Right? And when I just look at it as negatively as I possibly can, and I still can't find anything wrong with it. Yeah, I don't think that's like moon boyish manner. So we gets that ETF, we're lit. Exactly, Doran. I've never cried over dry powder that didn't get spent. Like if I bought the dip and I didn't buy it heavy enough, that type of shit. Like there's always gonna be an opportunity that's gonna make you happy that you've got some powder on the side. I would definitely go in and take a third and fourth look at Sui chip before you come to that conclusion. Personally. That's different for each person, try. The easy answer is as long as it takes you to make friends with your demons. That's the easiest answer. Learning the technicals, it doesn't take long. What takes long is controlling your instincts, your emotions, your tendencies, right? Your ego, your revenge. That's what takes the hardest, the longest. All the other shit is easy. Technicals, proper sizing, proper risk management. If you're a good student, that shit is easy to teach. The psychology part though. And then the crazy thing is that right when you got the psychology mastered, right? And you tell yourself, okay, I want to do this like full time, you're hit with a brand new box of bricks that you never dealt with before. It's completely different to do this when you got a job on the side than to do this when this is your job, right? The psychology switches and then you got to adapt again. I'm fully confident. Like, I'm 1000% confident that I can teach anybody with a desire to learn, let's say, how to trade technically, right? And be profitable. I can't say the same thing about psychology. Right? There's some people that I'll never be able to get through when it comes to the psychological part. Like, they're gonna have to go through it themselves. But if you guys do the hard work, you know, the problem with mastering your psychology is that you got to deal with it. And I'll be honest with you, as speaking to the men specifically, some of us haven't done too much time looking inward, right? Looking at the man in the mirror. We just kind of move from day to day and deal with it because we don't have time to sit around and think about all that type of shit. But you have to, right? You got to dig in. You got to do what they call the shadow work. Go into the deep recesses of your mind. Figure out what makes you tick. What makes you want to take risk when you know you shouldn't. Right? What makes you break rules that you know you should follow. Make peace with that. Find a way to get it out, you know, in a healthy manner. And then you won't have a problem holding on. But if y'all take care of that, and I'll take care of the technical part, we'll do all right. Thomas, that we pop. I think we pop. Take this vector. Probably target 3. And then we'll have to see, right? Because at that point we'll be out of the range, which means if we come back and we hold support at the top of our range, then that's a breakout. If we can't hold support, then we'll come back down and probably go after CME. Yeah, it changes to a whole new. It changes to a whole new, a whole new psychology when you're doing this for a living. You stop chasing the big hits, right? It's about the daily bread. Instantly, what's gonna happen when you decide to do this for a living is that you're gonna want to prove to yourself that you made the right decision, right? And usually, the way that happens is your mind's gonna go to, I need to make as much as I make at work. So you're gonna take your per hour, and then you're gonna try to make that consistently. Right? Some days you'll make twice as much as you did at work. Some days you'll only make half as much as you would have at work. You average it at the end of the week. As long as you're making more or equal, right? Then you know you're on the right track. But for me personally, I didn't make that move until I had at least 3 years of expenses saved up. At least 3 years. One, you go into a bear market, and I'm not talking about the down. You can always short the down. I'm talking about when the bear market just runs flat for a year, you know, going into the first year of the bull market. Money gets kind of tight at that point, right? If you're not invested in other things, or if you don't have your backup. Target 2 hit. So we're officially at the top of the range. Yeah, you have to, because if not, it's the stress that you're gonna be trading under is gonna be too much, bro. Like I said, the psychology changes, right? So the 3-year bubble is to let you adapt to the new psychology of, nah, this is it, make it or break it. Like, trying to lock in. But honestly, like, my advice is you stay working for as long as somebody's willing to pay you for your time and you don't absolutely hate your job, right? You keep bringing that dry powder in. Yeah, I hope so, Bands. I'm looking for ETH all-time high by Halloween. Yeah, sometimes we gotta touch the stove, Rajesh. I was like that too, though, bro. I had people telling me not to do the shit that I did anyways. Not to buy the alts when I wasn't supposed to, not to trade leverage when I wasn't supposed to, right? But I went in and I touched every one of those stovetops. Touched it, laid my hand on it, rolled it back and forth to make sure it really burned. Touched it a third time just to make sure I wasn't tripping. But those rules that I created, right, for myself from getting burned that many times, they'll never go away, right? Those rules are set in stone because they didn't come out of somebody's mouth, right? They came out of my experience. Like, you guys that have decided to slow down on the leverage, maybe lower leverage, or to slow down on the percentage of leverage for your entire portfolio, right? Nobody had to tell you that. The 10th taught you that, right? That lesson, those rules that you made for yourself on 10-10, they're not going to go anywhere. Like, those things are set in stone. Time does change that, though. You got to be careful. People start to relax on their rules. Slippery slope. Let's go. That's good, Jay. I appreciate that. It's just real shit, man. Like, we all go through the same thing when we come into this, right? There's like a cycle that we all go through, and we all make the same mistakes. The best people, the people that are really going to win in this, are people who can take it from somebody else, right? People who don't have to touch the stove, right? You find somebody that you trust or whatever, and you can learn those actual rules from them without having to do it yourself. You know, that's gold. But some of us aren't built like that, you know? Like I said, I wasn't. Bro, when people told me not to trade leverage in the beginning, I 1,000, bro, I promise you, the first thought that came into my head and stuck there was, oh, y'all already got the bag and now you don't want me to get rich. So you used it to make your bag, but now you don't want me to use it. Like, you're gatekeeping. Like, that's how I felt, bro. Until the first liquidity sweep. I just thought they didn't want me to win, and so I'm not even playing. And I know a lot of people come in here and feel like that too. I mean, I've had people say like, yeah, but you know, if I had your money, I wouldn't trade leverage, you know, that type of shit. And it's like, bro, it doesn't, the amount of money doesn't matter. Honestly, the less, the least amount of money you have, the more careful you have to be with it. Right? Because you don't have a lot and you need it to trade. Right? You don't lose this game until you can't trade the next day. That's when it's officially over. The amount of times that I've seen people be like, it's my last $300, man. I'm just gonna ride it to liquidation. And it's like, bro, that's your last $300. Like, you looking at it all wrong. Yeah. The main rule, guys, if you want to pull one rule out of 1010 that can save you from getting burned the way you did, it has nothing to do with the amount of leverage you use. It has nothing to do with your stop losses, because like Mana said, even the 2x's got wrecked and all the stop losses got skipped, right? The rule you want to pull from this is the percentage of your portfolio that's exposed to leverage has to be low. It has to be low. You've got to be able to lose the entire leverage portfolio and not even blink an eye at it. Right? That's the only thing that saves people. I could sit here and be like, well, you shouldn't have been even 2x on alts that were off rotation, but you know, that's whatever. The true part of it is the amount that you were risking, how exposed you were to leverage. Yeah, options caught a pretty big bid after that. You could see some of that rotation. The leverage traders moved into options. I appreciate that, Sam. I mean, I don't know. Some people, some technical people might come in here and think like, we on some like foo-foo new age shit. But they probably won't be here in 3 years. Rejection, that's like really close to financial advice, brother. Which we don't do here, obviously, YouTube. This is not financial advice. This is purely for entertainment. Crypto, for the most part, is all a scam. You will lose all your money. But there are some rules we can follow to sort of mitigate that. It's possible, Thomas, but remember, anything all the way up to CME gap is expected. Right? So we can't let it hit sentiment if they come for CME gap. We've seen it too many times. That's one of my rules, Doran. It's all a scam, bro. It's all a scam until proven otherwise from the very beginning. I don't care what it is. Bitcoin, scam. Now dig into it and prove otherwise. You'll be able to prove very easily that it's not a scam. But when something is a scam, you know, it's better than just thinking everything is on board and then, yeah, so everything's a scam. Your money is all gone. Tiverton, is all going to depend on if we ATH on ETH. The reason I don't want to give any top targets right now is because if ETH doesn't hit ATH by Halloween, and we have to wait until the second week of November for ETH to hit ATH or even start moving, then those top targets are going to look drastically different. So that's why I kind of want to dig out of this hole first before we start talking about top targets. But let this play out. Let's see if we hit our target 3, and I'll at least take a look at it for you. Yeah, I just don't, you know what I mean? I don't want to give you a target and within a week we've got to readjust the whole shit. Especially since that coin is severely off of rotation. Nah, it depends on how this plays out. I mean, the way it's looking, November is going to be the run for the alts, right? Because that uptick in liquidity, if ETH hits all-time highs, this is what'll go into alts. So for me right now, I'm looking at Christmas. And then I'm going to a very small portfolio after that. Guys, after Christmas, I'm a trader. Right? Meaning I'm TPing the majority of my Bitcoin. I'm TPing all the shit I've been holding for a long time. Right? From this point forward, I will play the swings, but I'll play the swings as a trader, not an investor. Which for me means very small amount of projects, larger size, tighter stops, no overnight plays for the most part, right? That'll be, we'll see, data dependent, but at that stage, I'm not sleeping on trades. I'm not holding them long. I'm playing swings hard. Tony, they'll come from measured moves, right? Patterns that we have played out, fib levels, but mostly patterns. Patterns. Target 3 is the end of this vector. Target 2 was the top of the range, right? We said if we held the bottom of the range, we would shoot for the top of the range, right? So target 2 was top of the range. Target 3 is that last vector. Target 1 was this W pattern. We'll go into great detail when it comes to all of that shit for our class of 2026 bear market Cypher school. No problem, Tony. I mean, we can go a lot more in depth. And I mean, you guys can correct me if I'm wrong, but I feel like right now where we're at in the market, my time is better used in just breaking down the current price action and what we need to know for the next, weeks and months ahead. Right? If it's not going to help us trade the next part of this market, I'm not even covering it. It makes no sense. All I'm going to do is fill your brain with shit that you're not going to use in the next 2 months. And, the last thing I want to do is get into like analysis paralysis. And that's easy to do if I start going into everything that I look at. If you're new, right? People that are not new can obviously deal with it, but
Yeah, I guess I'll deal with it.
thank you. I was worried specifically about you. I was like, I think everybody's gonna be cool, but Tana's not having it. What's going on?
Where's my music?
What are you up to?
Just watching. I got you on my big screen.
Nice. Birthday pump continueth. Yeah, yeah. We're green for the month for now. Uptober, more like Craptober. Just thinking about everybody that came in here for the last 3 weeks doing their bearish victory laps.
Hmm. This is a weird pump. It felt so weird. I don't know. I was like, I'm not gonna believe this. Look at that puny little W. I watched that W form down there, and I was like, man.
So remember where it formed.
I know it was like that weekly support level, but I didn't
No, it's
know
not
about
even
the
that.
weekly.
Just the range trading. Remember, like we had fallen out of this range, and all we were waiting for was to hold support to be accepted back into the range. Right? When you have a deviation out of a range and it gets accepted back into the range, we target the top of the range. So that for me was the clutch part of it, actually holding. What I was worried is that we would go into this weekend trap and have a false move that broke the range or something and screw it all up, right? But as soon as we held, the market took the cue, right? That we had held the bottom of the range and that we should target the top of the range. And then we put in our bull flag right
Maybe I don't
there.
know enough about ranges. Like I don't know how
You
you
gotta
got
go to
that top.
Cypher school.
What? How'd you?
I'll show you. Hold on.
How?
And
Who?
then that was the measured move for the range started back here. This double top. Right. So we
Like
were
what?
in this range here. Those were our range highs. Those were our range lows. Right. And then we fell out of the range. So when you fall out of the range, there's two possibilities. It's a breakdown or it's a deviation. A breakdown will retest the range bearishly and then continue, right? So this looked like a decent breakdown of this. So what we wanted was to turn it into a deviation, which means we had to get accepted back into this range. Not just come into the range, but hold support. Right? So we came into the range, put in that M pattern, didn't hold support, broke down again. Came back into the range, gave it all back, didn't hold support. Came into the range, didn't hold support here, came into the range, didn't hold support here, came into the range, finally held support inside of the range, up and to the right.
That whole move looked so funky to me that I wasn't paying attention to that.
I mean, it does a little because of the liquidity injection, right? Like, it's definitely more bullish. But we did come down and retest support. We have a fair value gap here, right? We didn't come down and test these highs at all. But that's right in the middle of our CME gap, which for me is still a target. We are now rejecting off the top of the range. Now, the way ranges work when you have no deviations or breakouts is obviously top of the range, bottom of the range, top of the range, bottom of the range, top of the range, bottom of the range. So if we reject, then I think we're coming back for CME. What I want is for this support to hold this up. Right? That's our macro support there. All of that trying to get above that we couldn't do. Come down and hold that, clear CME gap. Put in a large W. This is going to get really messy, but I'm too lazy to put in a large W, come down to CME, put in the right side, bing, bang, boom. Easy peasy lemon squeezy. The main part of that liquidity is sitting right at the bottom of CME. It wouldn't be the last time they came for the 100Xs and left the 75s. The psychology of it holding is going to come from this. It's going to come from everybody who said it was a bear market, who was freaked out, that didn't buy back in. At this point, if you're not chasing and you're watching, you're begging for a retrace. Yeah, Doran. That's why we look at every single possibility, right? We look at what has to break for what possibility to come through. That's why we've been looking at our macro here so intently, right? We had all three paths drawn out here, right? Nothing could happen that we weren't ready for. We watched to see if it was going to stay above and we would stay on the green path, but we were very cautious every time we broke these that we could be going yellow path down to the 50. We knew that that yellow path opens up the possibility for that drop down to 75 if we can't get back above, right? But it helps you keep your emotions in check, right? Like, I don't know about y'all, but hopefully what this chart did was keep you from worrying about that 75 drop every time we closed above, right? While everybody's freaking out with these lower numbers, we knew very well that for that to happen, we would have to break these levels, and these levels haven't been broken yet. There's also a possibility, Spark, that we don't go for CME, that we just pump, pump, pump. Like I said, the last major CME gap that we left behind, we pumped 25% away from it. If we pump 25% away from this CME gap, we're sitting at 140, 145. And that CME gap took 175 days to close. So the bottom of it is at 110.9. CME chart is BTC 1 exclamation mark. CBBI is sitting at like 72 right now. That shit is beautiful. Beautiful. Sitting in fear and freaking CME at, I mean, CBBI at 72. Take that.
Is retail buying any of this? It looks a lot of market maker crap.
There's not a lot of spot. I mean, we had here when market maker let off the brakes, they built that bull flag to build liquidity. On the next move up, when he let off the brakes, retail bought. Right, so we had decent buy pressure there. Let's see. 5-minute is a stopping volume candle. Right, we want to check our bias here in case we're getting too bullish, so we flip our chart. Right, if we just had a large drawdown and we were looking to go long, would this look good? So you got your stopping volume on the 5-minute. Your invalidation for your stopping volume candle would be at 116.027, which means if we close a body of a candle below that, then that stopping volume candle is invalidated. And since we're upside down, that would be closing a candle above. First step would be a retest of the 50. If that doesn't hold, we go to daily open and the 200 EMA. If that doesn't hold, we clear vectors. If the 200 EMA doesn't hold, I'm sold on the idea of a CME recovery. If this was long, Nico, I would have already jumped in the trade if I was catching a falling knife. Right? Stopping volume candle closed. We had a bullish engulfing follow-up. I'm in. Couple of ATR underneath that invalidation, which would be somewhere probably halfway through this wick. And that's just for a fallen knife play, right? On fallen knife plays, you don't take drawdowns. If you're right, you're right. If you're wrong, you're out. Right? That's how I play fallen knives. I'm not gonna catch a fallen knife and put my stop loss down here. Right? If I'm right, I'm right. If I'm wrong, I'm out. Yeah, we'll give this 5-minute candle a chance to close, and then we'll check the 15. But as of now, yeah, it should be probably a stopping volume candle on the 15 as well. We got my camera was on. What's going on, y'all? What up? I got the vibes in the office today. It looks like a South Beach strip club. Let's go take a look if we ran into any walls here. Mm-mm-mm. Mm-mm. All right. So what did you guys sell? There's a wall some here because that rejection. Yep, there it is. So 1,000 Bitcoin is what knocked us there. And we've got about 358 Bitcoin underneath us. The bottom of this volume gap. I'd be careful, man. FOMC is a lot of volatility. Right? Market makers clear the order books before FOMCs, which mean as soon as orders start to come into the empty order book, you slip, right? There's tons of slippage. That's why on FOMC days, you see prices like, so it's trading on increased difficulty. Some people like the volatility. You just got to be a little safer. Remember, if you're shorting this, you want no candle closes above the body of that stopping volume candle. I mean, most people tend to TP before FOMC and then reposition once the smoke clears. Like people that are playing a, risk-adjusted strategy. I mean, that's the safest way to play it, Various. Right? Everybody's got different risk tolerance, but yeah, that's the safest way to run it. Let's run a mock sort of trade here. Where's my... I'm just curious to see what the ATR is on Bitcoin right now. $200. So if you were to run this one ATR, is it? It's 116. That would be one ATR. And then two ATRs. Would be above the wick. Right. So I mean, it just depends on, like I said, risk adjusted decision. On fallen knives, I have one ATR is what I play it. Two ATRs would be more for like maybe a level 2 trade or something that you want to give a little bit more room to breathe. But there is no room to breathe for fallen knives. right? Either you're right and you caught that bottom, or you're wrong, you rinse and repeat, and you give back that little bit of change as the cost of operating business. And again, if you're having trouble with your bias, flip the chart, right? If it's easier for you to go long than short, then flip the chart and watch it inverted. There's nothing wrong with that. It's whatever works for your brain. For me, it just boils down to why did I get into the trade, right? Catching a falling knife, I got to be real with myself and say that I got into the trade because I thought that was the very top. The second that that idea is no longer valid, I need to get out of the trade. That's not why I took the trade. I didn't get into the trade and say, I think this is the very top, but it could go a little bit higher and maybe it goes to grab that. Unless you're layering into a short, right? Unless you're DCAing into a short, then that's different. You know, maybe you make that decision. Stopping volume candle is good. If it goes up to the vector, I'd DCA a little bit more, you know, add a little more to the short or whatever. But that's not the type of game I like to play. If I'm right, I'm right. If I'm wrong, I'm out, and I'll try to be right again. Anything other than that is like going into the hope part of the trade. Right? It starts to come up. You're like, well, maybe it'll, you know, it'll just reject off the wick. I'm not gonna TP. It'll just reject off the wick, and then it goes into. Then you're like, okay, it's just gonna clear the vector. Once it clears the vector, it'll be fine. Then it goes to target 3 and passes. You're like, okay, well maybe it'll be this vector. And before you know it, you've talked yourself into a 20% drawdown. When the main reason that you got into the trade stopped being true a long time ago. It's easy to do, Nico. It's real easy to do. It'll bounce off that 200. You know, it'll bounce off that supply zone right there. Oh, it's just going for the fair value gap. Or moving it. Moving the stop loss is an issue too. Bro, when this group first started trading leverage, right, when we first all got together, nobody traded leverage in the group, right, for the most part. I was already done trading leverage. We didn't even talk about it because there was a lot of new people. During the bear market, they discovered leverage. It started going down into the in the basement to trade. I'm telling you, it was so bad that like you had to go into another room to trade leverage because it would be an hour of people warning you, right? So they went down into the bottom basement, and I go down there to chill with them sometimes because like, okay, you're gonna play with chainsaws. Let me try to help a little bit. And I can't remember what exchange it was, But there was an exchange that when you moved your stop loss, it went boop, right? Just like a quiet, like boop. And I'd be down there in the room, and everybody would be in trades, and you would just literally hear boop, 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 boop. Like, yo, y'all are bugging out right now. Stop moving your stop, man. What's going on, Taz? You can reach me on Discord, dbloc.eth. It was just a wave at the time, bro. Everybody was getting their .eth. ENS was big. I made a lot of money on ENS when they first came out. I locked it down because it was a five letter. Bro, there was a time when ENS first came out and people were buying ENS names to sell them on OpenSea. That so first it was 3-letter names, right? Any 3-letter name, and then once all the proper names were done, it just like abc.eth, xyz.eth, sss, whatever, any 3 letters. But they were going for like you could like 10x what you spent on it in one day. Just go right to OpenSea and sell it off. And then when they ran out of the 3 letters, they went to the 4 letters. And then they went to the 5 letters. I almost didn't even get my name. And then once all the 5-letter names and all the 5-letter number combinations were bought and sold, they went to numbers. 3 numbers, 4 numbers, 5 numbers. It was ridiculous, bro. It was like an ATM there for a minute. Damn. Yeah, it's crazy, bro. I remember the ICO, IDO craze. 2000, I mean, what? Yeah, 2018, 19. We'll be there again, guys. We just got to get into quantitative easing, man. Right? One of the main things that I want to sort of stress is that we've now seen Bitcoin perform through every monetary policy environment that we have. Right? We've seen Bitcoin in heavy QE. We've seen Bitcoin in light QE. We've seen Bitcoin in heavy QT this run. And we've seen Bitcoin in light QT 2016, 2017. So the lessons we can take from that are 2017 doesn't count because we didn't have many alts at all, right? The market was very small. But the lessons we can take from that is the next time that we go into a bull market and we're in quantitative tightening and the Fed is like heavily tightening like they were this time, you just got to concentrate on Bitcoin until the time is right. Right, because the money is not gonna the money's gonna flow to the kings. Now, the next time we get into the market and we're in QE, which should be the next cycle, right? It's gonna be different. These alts, when they move, they're gonna hold ground, right? They're not gonna give back 70% of their gains every single time they retrace. So it's still gonna be important to get into Bitcoin early, right? Because Bitcoin is still the strongest in the beginning. But once we start to rotate into alts during QE, you'll be able to long hold them, right? That's what we weren't able to do during this run. And what's going to happen, is that the lessons that people learn during this bull run, when we go into the next one, they're going to be scared to hold alts, right? So they're going to be selling off their alts quick, and then the alts are just going to leave them behind. So it's important to learn our lessons, but to also understand the right time to use the rules. Doge. I appreciate you, Viking. You're the GOAT, bro. I don't know. It'd be interesting to see. That's one person that I'd really like to chop it up with. I think we would have a dope discussion. We would like super nerd out and probably lose half the people in the chat, but that shit would still be fun. Yeah. So far, that short entry is printing. Didn't even come close to threatening the stop loss. Taz, if you're still in here, if you send me a friend request, let me know what your screen name is so that I can accept it. I've got my messages filtered for friends only. I'm not sure if he's still in here. The guy from Mexi. That sounds like a good trip. It depends on what's stronger. Right? ETH is outperforming. Excuse me. So our ETH CME gap would be I hope not. For what I need ETH to do, it would be a lot a lot more beneficial for us to pump. But here's ETH CME gap just so we know where it's at. We'd be looking at, if we came back down to CME, a 6% drop. What we want for Ethereum is to hold this range. So we could come down to CME. We just don't want to spend too much time underneath 3.9. And then everything changes for ETH once we pop up above 427. Wouldn't worry too much about the retracement on ETH, because if Bitcoin comes down to CME and just puts in another high on Monday, then ETH will do the same thing, in my opinion. But I'm ready to cook. If we were ever going to have a weekend where CME didn't fill, this would be it. Right? It's not necessarily the type of thing you ever want to put yourself in a position to call, since 80% of these things fill. Right? But with the liquidity that we're looking at in the next couple days, some of the bullish sentiment that we're looking at, I wouldn't be surprised if this is one of the times that it gets left for a couple weeks or months. Preferably 3 months. 2.5 months and we fill it on the way down would be great. Yeah, I got you. So this vector gap fill was our target. Right, filled that, put in the lower high. Good TPs at the psychological low now. Maybe 200 EMA. This does look like it's got a little bit of weakness forming. 200 EMA would take us down to fill this vector. And still have a decent chance to hold that support. But recovery needs to be quick because this M pattern is kind of ugly. Yeah, the 200 on the 1 hour would be the next target in my opinion. That takes you into that vector. I mean, we'll go down to smaller time because we are at the psychological low, right? So there's a non-zero chance that this just comes back into the range. But if you lose the psychological low, then I would be looking for that vector recovery. stopping volume candle on the 5-minute bullish engulfing. This would have been a long if you were catching a falling knife. But the problem that I have with it is you're really close to your 800 EMA and your 50. Right? So that's a pretty decent spot for a retracement. It could just end up giving you the right side of your W. Right? But just watch out for that. And you got your 200 right above too on the 5-minute. Sui. Sui.
Hmm?
Not you. That needs to be the entrance music. Sui. Sui, 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 sui. All right, well, broke uptrend. Sui's had a nice little push here, though. Right, support, 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 support. Broke that uptrend now, coming after vector recovery down to like 263. But the liquidations underneath are piling up.
I've been wondering what kind of prices the bear market will give me.
Depends on what type of prices the bull market ends up giving us, but you can take 90% off that. 85 to 90% is what I think Sui goes down. And I'm going to be right there. Pick up
With
the
your
pieces.
excavator.
Right there to pick up the pieces. All right, so obviously our psychological ranges, right? We talk about this all the time. They just got set. So that's always a decent target for inter-week sort of thing. But remember, we're waiting for Bitcoin to see if it puts in a higher high tomorrow. Right? So a Bitcoin higher high tomorrow would probably give us a Sui higher high. But our 3-day retracement, in my opinion, brings us back down to the psychological ranges on most alts. Right? It's not just a Sui thing. If you look at stacks, same shit. Plenty of liquidations to get there, breaking its uptrend. Psychological range hasn't been retested after break-in. Ronin. Want. Right. Remember I tell you these alts are all on the same playing field. They're just different levels of bullish or bearish. Right? But the chart is the same. Motivation is the same for most of them. It's possible, but we can't call that until Monday. Honke. Honke's running for it, huh? Doing that shit. Yeah. So if Bitcoin, like I said, puts in another high going into tomorrow, then alts can avoid those psychological ranges. But on Bitcoin's 3-day retracement, I think we touch down to those psych lows. And for Bitcoin itself, its psychological high and low is right in the middle of the CME gap, right? So that's what we do. If Bitcoin fills this CME gap, we run to our alts and we check to see if they've filled their psychological ranges. If Bitcoin looks like a buy and you are in the habit of trading alts off a rotation, then that would be when you take the risk. Financial advice. No, we judge whether it's a false move up or a false move down by what side of the traders gets freed. You go into the weekend trap, you've got trapped longs and trapped shorts. The side that gets freed is the false move for the week. Now remember, let's pretend this CME gap isn't even here, right? Let's just pretend we already closed CME down here and we had this move as a false move up. I think the reason that people fight against it is because they think that the false move means that you're going to end up going in the other direction lower than when you started, but that's not how it works, right? You could have a false move up that clears your trap longs, and then your 3-day down could just do that, right? You don't have to, the 3-day down doesn't mean that you come back, right? It's not a false move in the sense that the price action gets taken back. It's a false move in the sense that the majority of the week will trend in the opposite direction, right? Another example of a false move up 3-day down or a false move up 3-day pivot would be if it came up like this and then for 3 days went sideways. That also counts, right? It means that the original move for the week was up, but the true move for the majority of the week is sideways or down. Yeah, and it's even stronger if it's a stopping volume candle on the hourly and the 30-minute and the, you know what I mean? You build the strength of that stopping volume candle. The 4-hour right now, yeah, if it closes like this, the stopping volume candle on the 4-hour. The problem with, and I'll tell you right now, the problem with stopping volume candles on high time frames, I mean, they're good when it comes to pivots, but remember now you have to wait an hour to see if you get a bullish engulfing. Right, you've got to wait a whole hour to see if that next candle bullishly engulfs or not. So that's why we take them on the smaller time frames and we watch them build up. If I take a 5-minute stopping volume candle trade, I put my stop loss in, I switch to the 15-minute to see if it's a stopping volume candle, right? And then I'll switch to the 30. And if it keeps, you know, it just adds strength to the trade, basically. Yeah, 30-minute stopping volume candle, bearish engulfing, right? 15-minute stopping volume candle, eventually a bearish engulfing. This small candle right here was also a stopping volume candle. Nah, I don't think so. I don't think there's just not enough all respect due to my Canadian brothers and sisters. There's just not enough liquidity moving through there, in my opinion. What coin are you talking about, Evo? Oh. Take a look. And I gotta go do some research before bed, before it gets... Damn, it's already 4 o'clock in the morning? Oh, shit. I just been on here yapping. You're worried about it dropping down to 248? I mean, yeah, I understand your concern. I'll be honest with you though, if you drop underneath 440, the 248 is going to be the least of your worries. I think a way stronger oh shit line would be right there. Just because, I mean, you're putting in a massive M pattern. You know, you've double topped. Now, this measured move doesn't make sense. Right? I'm not saying that I think this whole thing would play out. Because this measured move literally brings you down. Damn, we're not even on log. I'm going to draw it out and then I'm going to tell you why it doesn't make sense. Right? Chances are we're not doing that, obviously. The problem is that you don't have to do it. Right? Putting in an M pattern that big and breaking structure is going to shake people. So if that did break and I was still interested in buying, I'd be looking for re-entry around 3-1. Let me see where we're at fib-wise, though. Yeah, see what I mean? So the 786 retracement would be that structure break. So I wouldn't want to come down underneath the 786 here. Yeah, Evo, for me that'd be easy. If, well, all right, so let me be clear. Right now the vector recovery that's taking place is this vector down here. Right? If we come down and hold on that 7, I'm targeting this vector. Right? Full recovery of that vector is 15.9. That would be my target. Tight stops underneath the 786. Shooting for the top of the vector. Go to the hourly real quick so you can see what I mean. Right? And there's only really 2 things in your way. I'd be worried about getting above that 50 on the hour and getting above the 200. You get above the 50 and the 200, that's easy money right there, in my opinion. Not financial advice, but that's how I trade it. I'll always trade towards imbalances. And the good thing is that you got clear invalidation, right? You know you don't want to play underneath this range. So when it comes to risk-adjusted returns, you know, even if you were just to slap, the hell is... stops underneath. Targeting top of the vector. I mean, personally, if I wanted to trade this, I would wait. I want a deeper retracement. I'm not trying to take a 27% drawdown on an hourly, right? On that type of retracement. Right? The trade as it stands right now, which to me isn't a difficult trade, is only a 5 to 7. I mean, a 5 to 1. We'll call it 6 to 1. Right? It's a 2.5x, so that's a good move. But the drawdown you're risking is kind of deep here. So personally, I would be more excited if we saw a rejection and an actual touch of that 786. The difference is that it turns it from a 5-to-1 risk reward to a 56-to-1 risk reward. Big difference. You're only risking 4% of the portfolio. You know what I mean? But at this point, I mean, if you were to take the trade right now, like I said, the only responsible place to put it would be under. Well, I mean, I guess you could go a couple of ATRs underneath. You could go a couple of ATRs underneath this wick, but you're still looking at a 20% drawdown. Right? One of those situations where it's a decent looking setup that hasn't finished setting up yet. See how they've been attacking these bottoms? 3 manipulation X's, and then we popped up 2 manipulation X's and a blood diamond. Yeah, I mean, it's easy to have an invalidation, right? Like if it'd either be a breakout trade or a dip buy. Right? So if you're like, okay, I don't want, you know, I don't want this thing to get away from me. You could play the breakout. You just have to be aware that your first test is really like soon, right? You'd be popping up into your 50 EMA, and chances are after this drop, you haven't retested it one time. The odds of hitting it and just taking it on the first go seem pretty low. So what I would look for if I really wanted to get in this, my hopes would be that we're looking at the beginning of an accumulation range. Right? And in this accumulation range, you could DCA the bottoms of the ranges. But me personally, what I would do is I might DCA a couple of the bottom of the ranges, but I'm waiting for that sweep. Right? If we do range out here, you're going to get tons of longs underneath. Before it goes, chances are it gives you that little sweep, and then it gives you that really good risk reward. You know, where you're risking like 4% of the trade or something to see how it plays out. So it's just like patience, right? Like right now, we're rejecting off of that on the hourly currently. I haven't seen snow in so long. Yeah, I'll look at it real quick, but then I gotta go. It's past my bedtime. I still gotta do some research and shit too. Nah, Donald, we're good. Weekend trap made it. We left the CME gap behind though. Only way to really invalidate the weekend trap is to free the trap longs or the trap shorts too early, and that would be like Saturday afternoon. Excuse me. What was it that I was looking for? Yeah, sleep is a must. Oh, Hasio H. All right, here's the TA that we had on it. That's not bad. We're already at the 1618. I haven't looked at this for a minute. Damn. We were playing with this thing when it was a baby. Excuse me. My bad. I'm taking a trip down memory lane. How's that for a call out? Big yellow circle right at the end of accumulation at 2 pennies. Large market cap memes. It depends on how much time we spend in the last phase of the alt season, right? If we spend a long time and money gets to really circulate, then maybe it has a chance to get into some of the, you know, the lowers. So we had that move up. We then had our drop down. Failed to break out of that wedge. That accumulation range failed completely. But we eventually did pop out. Damn, that's crazy that that came all the way back down. I'm guessing that was the 10th, right? Yep. Yo, if you held through this shit, you've got serious conviction. All right, so yeah, we're over 1618, running out of gas. You'd be breaking structure basically at 1618. If you lose the psychological low here, that short should print to that 200 EMA on the hourly. But you do have a stopping volume candle here on the hourly and what looks like it's going to close as a bullish engulfing, so be careful. You're ranging, right? So it could easily just continue to range. And if you're short heavy, that drawdown might be enough to, you know. Like we're ranging right now. This is a range. Right? Resistance is resistance until it's not. Support is support until it's not. So the best risk-adjusted way to assume the price action will continue would be to continue the range. If that breaks, then 200 EMA, right? But it could easily just continue to range. Best way to do it if you're not good at spotting ranges is just use your fixed volume range profile. Right? Ranges are created by value area highs and value area lows. The nature of the volume profile is when price tests the value area high and gets rejected, it returns to the value area low. If it deviates out of, if it breaks out of the range and comes back, it's a deviation, right? It's range trading. It's the same thing that we do with regular structural ranges. These are volume ranges. 9 times out of 10, volume ranges and structural ranges will be pretty similar in size. And yeah, you could very well just be building bullish structure to increase liquidity above, right? Farm for liquidity. This would be my biggest fear if I was shorting right now. So this is what I would watch. Right? You really could just be staging for another move up. There, you got it, Evo. I mean, I'm not trying to talk you out of the trade or anything. Like I said, we don't have confirmation either way, but just be aware that yeah, it wouldn't be unheard of for this thing just to come back up to the top of the range. Right? It would literally just be exactly what it's been doing. Like this same level that we're holding right now temporarily, reverse price there, there, right? Each time it did it, it went to at least there. This time it took it to at least there. So your two highest highs came from support being found at that level. If I was in a short, what I'd be waiting for to cut it would be if we can't get above the 50. If we reject off of the 50 and we start threatening these lows, then you're good. That's what you want to see. If you pop up above the 50 and hold support, that's where you're getting into danger zone. Because that opens you up for vector recovery of that imbalance right there. Alright, I gotta go to sleep, y'all. Evo just tricked me and got me into my nerd bag. But I gotta get some rest. I appreciate y'all, man. Trade safe. Again, don't let the sentiment kill you if we come back for CME, y'all. I'm all for not coming back. It is possible. Like I said, it's set up to keep going. If we come back, don't let Twitter ruin your life. Right? Just remember that CME gap gives us the right side of a W on bigger time frames. Good night, family. Alta going through it right now. All right, let me stop. Talk to you tomorrow.
upbeat. I see a head and shoulders. Head and shoulders. What's that?
Alrighty, good morning, family. Here it is Monday morning, and we're headed into FOMC week, as you know. So, yeah, last night we did go ahead and move up over that 115.7 target, and we sorry about that, I had my phone on. All right, so the thing is that we have downward pressure from our previous moves, so that makes us a little bit vulnerable to this 4-hour chart. The 5 EMA is coming up from the bottom. I'm going to show you right here. And price is above, but there's pressure on this curve. As you can see here, this is a fib spiral. And you can see this top up here was last night. So the potential yesterday, was to cross 116,370. And we got a wick up to nearly there, but wasn't successful enough. So now we are kind of in a descending decline, and we have an ascending angular from these fibs right here. So these two blue lines that intersect right here at the corner of this 4-hour are what we're dealing with right now. See this 4-hour candle right here? All right, then you have ascending lines coming this way. So this is a spot. Now, if we continue to push down right here, there's the potential to have our flow move towards 114.1, as you can see down here. If, however, the earlier time frames can get momentum and trade up over 115,700 right here, see this on the right, there's this arc. Then you see that orange line. So here's our candle tops, the bodies. I'm trying to get them freed from the there. Okay, so you see, here's our wick, here's our curve, and then here is the descending angular. So a curve is obviously rounded, and an angular is a straight line. Okay, so we have a sharp angular, and we have a sharp upward angular right here. That meets at this point. That point is 115,654.9. But you notice that our overhead is lower. Our overhead resistance is now lower. So that point there is dropped down forward in time to this point, which is 115,425. Okay, so if I take a vertical line from this candle that we're on and draw it straight up from there, you can see the points that it hits. Boom, boom. So that means that the early time frames have got to arc over the top here. All right, so let's go down to the 5-minute. So here's our 5-minute. And here's our price flow, or you see the black line with the dots. All right, so here's that line, 115,261. Here's those lines that I showed you that were on the 4-hour chart. So if I drag them down here, this is where it brings us. So you can see this curve is continuing to put pressure to the downside right here. And then here's our volume on this side of the chart. So there's a gap down here. So let's look at the time. This is 10 a.m. today, right here. Here's our 113.9. This is the hinge. This is the spot that in order to remain bullish, at least on this term, we need to remain above 113.926. You can see this space right here. All right. So now I'm going to manipulate this chart a little bit. And you can see that the flow is pushing us down. Hang on a second. So this is our gap space that you see between these arcs and this arc. A second. So we have a potential here to cross this angular, this green one, after this yellow. See? Boom, 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 boom. That would be the flow. And then that gives us a target down here towards 114.1 and 113.9. Unless we get the momentum like we're sort of showing right now to get across that 115.7. Remember, this is that arc over the top. So this is a spot we're in, you know, we're either going to succumb to the downward pressure or we're going to reverse here before that 4 hour. Because otherwise, these lines that you see here ascending are going to become resistant. Because overall, we have this arc, these two blue lines up here. And you see how we're in the center, right, like this. So that makes this point right here up top that could have been our breakout period yesterday is now becoming more and more resistant. See this angle? And our price is here. So if I turn my chart this way, you can see how these lines are becoming overhead as pressure. So if I take that point and push it this way, where does it come to? It comes to this spot right there. So if we're here now and we cannot move past that angle that you see up here as now as resistance, we have to cross those like right here. So take a swing up. That's where I want to be. Otherwise, we're still in a descending pattern for now. See? Now, moving average wise, we're at the 200 MA. We're just touching it, and we have a death cross because the 50 MA. Hold on, I gotta take it off. All right. So there we are. We're underneath. Oh, just a second. On the 5 minute. So this is the structure. And what I was showing you just a minute ago was see how that's curved down, right? So we have to arrest that curve like soon, right here. And that means getting above the 50 MA on the 5-minute. Otherwise, we have this gap to deal with. And notice how that gap takes us down to 112.8 and then 112.6 or 4. Sorry, 112.4. Because here is your base of that moving average, the 200 MA right there. So you see this gap. So now let's go back forward a bit to our 30-minute. Minute has its 50 MA right at the daily open. So the 30-minute has support, potential support line that we can build upon here at the daily open. But that is a drop, and then from there we could come down to this pivot point, which is 113.9-ish. Okay, so that would mean that we would come down through this ribbon or the cloud of the 50 EMA. Right, the 50 EMA and the 50 MA are nearly on top of each other, right? So if we flow through this time frame, price comes underneath that 50, probably going to touch that, test the pivot point, and then look at here. This is the spot where we had the incline up, but you can see that if we top out, if price gets under this horizontal line right here, that you have a curve that would roll over and it meets here at this point about the pivot point. So what time is that today? That's tonight about 9:30 on the what am I, 30-minute chart. Okay, and arising up from above, or down below here, you see this motion. You have the 800 and the 200 MA, and I'm talking about the 30-minute chart. The 800, of course, is slow moving, so it's moving at more of a horizontal. But the 200 MA, you see, just came across the top of it. So that is bullish because that means that the 200 is getting momentum. The 200 MA, all right? So we have a potential big gap here from the 30-minute chart. If we come under the 30-minute 50 MA, we'll test the pivot. In other words, we'll test this run up. If we fail that, it's likely that we come down to this supply line right here, this demand zone. And that's 113.9 again. If we fail that, then you've got the 200 EMA and the 200 MA beneath. If there's even more pressure, then you can lose the structure, right, from this point on the 200 down here. And that brings you to the base of the Bollinger Band here, and that's 111, 169. Of course it is. So you can see here that. So we have a tricky spot to deal with. So we're basically saying we got to hold this 50, and then we want to trend upward across 115.5 to 115.7 in order to arrest that that gap situation on the 4 hours. Now we're going to go to the 4 hour and see what we got. So the 4 hour, see how we had this sharp incline on the 4 hour chart, right? It looks much sharper. And then I have a peak here if I draw that angular down from that peak, it cuts across the daily open and it comes down here to this 13 EMA, which you see up here. But what's at the top here for moving averages is the 200 MA. And see how that's curving here? So again, that's the 5 EMA on the 4 hour. So that's why I say you got to watch that line. Because if we push down from there, we're going to test underneath the daily open to right to this 200 MA on the 4 hour chart. So that could be a sharp, fast drop. And if you fall through that line, through the pivot, you come down here to the 200 EMA. Again, that's at 113, about 113,000. My eyes are, yeah, about 113 right there. So tricky spot. So we'll go back up to what's current or what's the most where the price action is, and so we'll look at the 3 minute, and the 3 minute is getting a little bit of momentum to the upside. So we'll want to see these early time frames from the 30-minute chart and below move in a pretty swift pattern up over their 50s and their 200s and try to get this last week's high right here. So that's the plan. If you're in from 111, that's a good spot. If you're looking for an entry, you might want to wait a little while. That's because we're in that zone where we don't know if we're going to come down here and test this pivot. All right, I hope you all have a great day. Okay, we're beginning to look pretty good here. On the 30-minute, we avoided coming back down underneath 114.9. And we're getting some momentum, some movement to the upside here, up crossing that 5 EMA. But remember, we have to close, these candles have to close above 115.4 because there's a lot of interest down here at that 50 EMA on the 30-minute. So even though we might pull up here temporarily, we'll want to see that overhead line crossed, and we want bodies of candles over the top of that. So between 115 and 115.7. You can see this peak of the 5 EMA right here. That peak gives us this horizontal line, this red one up here. That is $15,692 here. So right now, we'll put a target there. 115,687. And we're getting some nice momentum. See how this 30-minute time frame is ascending here. So this 50 EMA, if we can push up during this period of time, this 50 EMA is going to cross this angular here. So that you see how that makes that triangle. And then we come up to that, my green line is this line right here. So what we're trying to do is get past, coming back down to test that. But we're not out of the woods for that yet. So we have to see what happens here. If we have those moving averages following through, that 5 needs to come up over that 13. And then we need the 5 EMA to follow price way up over the top of this resistance line up here. By the way, there's institutional open interest that's up at 137,000, which is, as we've talked about before, that's a big target past 118.2. So this is on the bullish side here. We can see a rise all the way past 117 and 118.2, and then move up towards all-time highs again. But we need that momentum. And because we have that important FOMC meeting on the 29th, it makes this period of time just volatile with positioning and so on. So just have that in the back of your mind because that's going to take place on the 29th. And then on the 31st, there's also economic data coming out. So though we might see 116.8 to 117.2 and even 118.2 before then, it's important to remember that there'll be some volatility. Also, that day, we could rocket right out of the and close up over 120 on FOMC day. So this is just a tricky week to play if you're not already in a position. Overall, I'm pretty darn bullish. All right. Let's see what happens here. We're 115.3. So yippee. All right, we're over the 5 EMA on the 30-minute, over the 13. Like I said, let's make sure we have follow through of those EMAs and we're not just pumping price up only to just fall backward again, which is again likely given the placement of these moving averages. I'm going to go down to the 5-minute chart. Let's see how close we are. We have 115.469 to cross, then 115.687, and then again 115.975. And over the top is 116.069. So let's hit it. Okay, so we now are under that 200 EMA on the 5-minute. So we have potential to breach 114.5. We're looking for 114. Let's see. 689 to hold. Okay, there we broke lower now, and so now we'll need to watch for a move down to 114,280. So our overhead resistance now is 114,689. And we just popped out through that. All right, now we must close candles above 114.7 and then 114.818. We've got a lot of resistance to get through here because that 200 EMA is curving to the downside at the moment. So we'll need to stop that. Otherwise, our moving averages are going to come lower and we're just going to have to dig out from below. So again, our range now, we need 114.7 and we need to stop the descend but before 114,280. Is there anybody up with me this morning? I don't hear anybody. Maybe my mic's not working. Wouldn't that be something?
Hey, BJ, I'm listening.
Oh, good. You doing all right today?
Yes, I'm doing well. Hope you're okay.
I am, thank you.
Thank you for your analysis.
Oh,
I
you're
was
welcome.
keenly hearing you.
I'm glad. Thank you. Oh, thank you, Dunez. Dina, DNUNES. And Infinity, too. Thank you. Yeah, I knew we were in a tough spot there, so I needed to make sure that somebody was kind of addressing it. Denoons, okay. Usually it said denoons. Denoons. Long U or short U? Denunes. Is it? Denunes? That's it. Okay. Yes, I got it. Nunes. Yeah, I've known. Actually, I had a doctor with the last name Nunes, so you'd think I would have known that. But anyway, good morning to you or afternoon. It's nice to see you, Infinity. And Emad was up early showing pictures of houses or something. I haven't been out here for a while. Let's see. See some new names in here. Tiger Wally, where I forget where you don't have to tell me, but I forget where you're from.
I'm from Kenya.
Okay, yes. I think I remember that now from a while ago. Yeah, a long time ago.
Yes, been here on Discord for the last 9 months. Also.
Okay. Well, it's nice to talk to you again. Let's see how we're doing here. All right, we're getting some movement there. And we're over the 5 EMA on the 5-minute now. Just need the momentum to grab that 200 and then back over the 50. Our pattern looks pretty nice at the moment for that. And again, my green line is 115,261. Not a dollar less, not a dollar more. I'm just kidding. But seriously, that's a big point right there. 115,260 and above. So to get over that arc, again, we need 115,687 or more. And if you want to look on it, if you use the TR main, that'll be last week's high. Oh, Macdy, I see you there. And yes, I've been fine. Hi, AL. Thank you. I've done a little traveling and we've been getting our wood cut for the winter. And I'm getting prepared for my family to visit for a little bit. And then we might go down to Florida for Thanksgiving to see my daughter. So I got a lot of things going on. All right, we're pushing up against that 50 EMA on the 5-minute. So let's see if we can handle that. Again, even if we hit that 50 EMA, we still have the pressure to the downside on the 4 hours. So we need to close up above 115, at least 115,420. Okay, so currently the CME is at 114,630. So again, keep that in mind, please. And now it's dropped down to 114,610. All right, folks, we just lost that 200 EMA on the 5-minute again, so we have quite a bit of volatility here, but we're having a curvature to the downside. The 50 EMA now on the 5-minute chart is now below my green line of 115,261, which pushes, these moving averages down. So unless we can do this in a timely fashion, we are likely to test 114.5 again, where that daily open is. We're nearly to the bottom of the volume profile on the 5-minute. And we're nearing the break of the Bollinger Band on my chart. Okay, we're following my curve. This curve that you see here, I drew with a brush. That's why it's a little jagged looking. All right, so take a look now on the 5-minute where the moving averages are, the 50 MA and the 200. You see how they're about to kiss each other? The 200 is ascending, like we talked about earlier, while the 50 is descending. And remember, the 50 EMA, of course, is faster than the 200. So if we get this cross to the downside, it means, a little bit further push from pressure from above until we can come back and cycle around and close back over those. And again, look at my green line. See, 115,261. You see how that MA is crossed underneath that? So that's where we're at. Could be making a nice little bottom here.
Come on, let's go.
And the CME is at 114,800. So they've come up about $200. And again, I am still looking for at least 120 to 121,000. Right. Just so you are aware, open interest on CME is currently at 113.68 or 13.68 thousand. What that means is that those are the contracts that are not settled yet. That number can fluctuate today. Okay. 15.0. So you can see that we're having a little bit of a difficult time with this. Let's look at our 4-hour candle. All right, 4-hour. That looks pretty fine. So the body of the candle here is in a good position. Now this was opened at 8 o'clock and 8. So we have noon. So if we continue to move in a descending fashion, it's likely that we do hit that pivot point, 113.9 area. And then there's some at that point, then we would need to hold that there. Okay, so let's see, that candle's 12 o'clock, then 4 p.m. So yeah, if we make a rounded, but I just would be patient here if you're waiting for an entry because you might get a lower one than right now. Looking a little bit further ahead, we have the potential of kind of testing back down to the 112 area. Okay. So 112.6 to 112.4-ish, and below this triangle tip here would be 111, 649, and then a drop there would bring us to 110, 420. That's about October 28th. So we're building up a pretty expansive range here. It's tight right now, but by the time the end of the week comes, you know, we could have a range from 115.7 all the way down to 111 and 110. 110, what is this? Like 110 even. Or we could have the opposite. We could be from the 114.6 up to the 118.2. We are in a spot. All right, so I'm going to show you what the flow looks like here. See, this is the 4-hour chart. Here's your 200 EMA. See how it's coming, descending right along that triangle right there. See, this is that. I'm trying to outline it. See that? There's that triangle. Now, right here is where we get that deviation off of that edge of that triangle. Right up here, right there. So, hold that. Okay, so here's the face. Right here is the 200 EMA. So if I take that out in time, that gives me right there, that's the 31st of October. So you see how our curve was still in play. These descending angles are still in play right there on that day. So unless we're ahead, our candles are up in this area, right? So we're outside of this curvature structure. We can come through the middle down here and test that 800. So that 800 is right now sitting at about 111.4. 111.3 to 111.4 right there. So see, this is what made that 111.669 so important on this side, because this is our ascent up, right? Boom, boom. So if we cannot cross this edge of this curve, see where they come together right here? That's 115.5 to one, right up here. And that's 4 hours. So that makes this spot really valuable, right? See the 116.069 right there. But we're still under that curve. But we would be in a half moon situation right up there. Bump it, bing, bada boom. So if this pivot, what I'm saying is if this pivot holds, right, this new pivot, and we trade up from it, we're likely to come back over 116.5, right? And then try to move past 116.5 into the 117.7. And that brings us over our previous curve that is higher, right? So if you see over here on the left, this is our ascending angular that we dropped down from. Pull this chart down. Okay, so that angular is here, and see how this curve, that's that pink one. You can't see that line very well, but I'm going to try to show you this. Descending, right? So see how that descending angle meets this descending curve down here, and here's our volume, right? So we have a gap right in this area. See the tip, the flow of the 4-hour chart is coming up from below and rising up. So the moving averages are, the fast moving averages on the 4-hour chart are up in this area above 114, right? But the base of the 4-hour chart is still underneath, curving up. So now I'll show you that a little bit less wide, right, like this. So here you see the 5 EMA moved up, but it's not, that 5 EMA did not cross this line right here yet at this point. Hold on. Okay. Then it was here that our price moved up, and see how the 5 EMAs flowed, right? So now we're here. So this is the vertical line that we're dealing with. We're still underneath that descending curve, but our 50 EMA is still below, right there. That's where it is, here, and that's our 800. So that makes the case. See how this curve comes up and above. I've got all these price markers up here, so it's hard to see. But right here are where the cluster of moving averages are. And the date of that movement right there is between now and the 29th, which obviously is the day of the FOMC, which, kind of goes to show you that you've got people waiting for that decision. If that decision is less favorable for the crypto market, you can see that we would test that 50 EMA and fall down into this volume gap. And that would be between 108.7 and 111.5. So that's possible that we fall down in that area during that time. It's also very possible that we trend up today, and that we just pull back a slight amount again, and then rocket after the announcement. So again, this is why you want to look at your structure on the different time frames so you can see where that movement is. So here's our 4 hour. I'm going to take off. Okay, so this. So see how it is curving upward, but price is, up here waiting for direction, basically above that pivot, to remain above that pivot there, which is above the 13 EMA, but below the 5 EMA and the daily open. So we have this gap to worry about today. All right. And if you go to the 5 minute, there's the 800 on the 5 minute. There's the pivot point. There's the 800. So all of that suggests that we've got downward pressure. And there we had that cross that I talked about a little while ago, because we did not close over that 50. All right, so we'll see if we can have a reaction there above the daily open, or if we're going to fall down to that pivot. Okay, we had some attempts here on a 5-minute chart. But remember, in order to get our price where bulls wanted to go, got to cross the previous high locally, which is above 115.2, you see. And then even if we do that, you want to make sure that the 5 EMA crosses over the top of the 50 EMA and follows through all the way to surpass where the 5 EMA peaked previously, which is on this line below 115.200. See, so we'll need to see follow through up and over because you've got the 200 MA above the 50 on the 5-minute. So this is a tricky area still. Just be, lower high if we cannot cross back up and over. Momentum seems to be building here, though, so that is positive. So now we're testing that 13 EMA on the 5-minute. We just fell underneath it briefly. Let's see if we can just not make a lower low here. Okay, we got that break we were looking for. We are over that angular. We're nearly over this curve. I'm looking to cross 115, 469, and then 492. And again, we're looking for that last week's range, a high range there, above 115, 569. That was quite a bottoming. It was nice. So hopefully we can maintain this and get some momentum. All right, so you see how our 5 EMA is over the peak here? So that is a sign that we've got some continuation in order. But now we have to wait to curve up back over the other points of descent right back here. So we want that 5 EMA to cross the 115,469 number. Even after price goes up over it, we want that 5 EMA to follow through, as well as the other moving averages. So that depicts a turn or a change of direction, okay? Then here's the back one up here. So that number is just below this 115,975. And now notice when I come across here in time, future and time, see how those angles cross over the top? Those are the ascending angles from where we were. So if I pull this chart down a little bit, you can see that those were the fib spiral lines. So here are the arcs. Here's those fib spiral lines. And notice that we are still, down underneath. So these are becoming resistant. All right, so we have to keep that in mind overall, but we are moving in the, more of an ascending direction. But again, we need to cross these curves in order to make it less likely to come back down through this bottoming here. And that would be, again, coming back underneath 114,689. That would be a directional move towards retesting the 112 level, okay? So even though that looks like a real bullish move, it's got to be sustained above here. So that would mean crossing on the horizontal up above 116 into 117, see? Because those were the ascending angles there. So you don't get over them until now up here at 117.7. So that's the pink curve that we've been dealing with now, right there. Okay, so we're getting there, but not quite. All right, I'm gonna, unless somebody has a question or anything, I'm gonna sign off for a little bit. But I will certainly leave my chart here and everything if you like. And just holler for me if you have a question you want answered.
Yo,
Yo. Morning.
What's up, squad? How we doing today?
Alan.
So correct me if I'm wrong, but we do have until tonight for that false move up, right? That's why price is still kind of kicking.
That's what I understand.
So this is where you start singing the song, all my bags are packed, I'm ready to go. 'Cause I'm leaving on the jet plane. Look at the chart. Okay, everyone, this is my 3-day chart. And if you'll have a look here, I've got this over here on the edge is December 15th. 3-day chart. Sorry, I had my phone on. I didn't realize. Okay, so here we are in the 3-day. This is our price right here. This is the fib spiral that we're currently under the dome of. And when we exit off of that on this angular, you see this little red line here. If we can break up over 118,770, that opens the door to this expansion field up here. So then if I go, follow that arc on for time, you look at time down here, and that opens this horizontal above 115,469. Okay, you see that peak right here? Then here's the ascending angular that is now resistance. We were trying to make that support right there. Okay, in first part of October. And so now this red line that I call the 69-minute angular is our overhead resistance, a major one. Okay, so now you see where that resistance lowered. Here's the this triangle. So if I take that peak of that triangle, this corner, I'll open that up and move that through. Notice that that's at that 115,975. And then I'll drag that corner up where it lands there. Okay, so here's our price structure. Notice how we came over the top of the edge of that triangle, and now we're here. And then here's those two angulars, the major ones, one here and one here. And notice how that brings up that curve, right? That black curve. See where that black curve started, right back here? Okay, so on the ascending, we're in this ascending pattern. If I go straight up on a vertical line, and this is a crossbar, you see this white crossbar? Okay, so this particular candle is on that vertical line. So now I'm going to take the, sorry, I have to fix this so I can get to my tools. Okay, right here, we'll take it off. Okay, so you see how on the 3-day, we've just crossed over the top of our structure. See how price made a bottom formation? And now we are attempting that resistance level right here. See, here's the peak. There's the bigger peak. And so now we're right here. If I go back to the chart, it's this line right there that we want to cross, because that gets us above our previous structure. Okay, right there. Now, and if we push over that dome, that arcing dome, right, then here's our previous peak that we need to beat. Okay, so now I'm going to put that chart pattern back on. So here's the way it looks with factoring in all of the other time frames, right? And the patterns from previous. So you see right here, if I went up a straight line, I would reach that point right there. Now you go across, when I keep talking about that pink curve, that's where that comes from right here. That curve comes from, hugs price around, I'm sorry about that. See, from this spot, the connector is from here to here on that new fib resistance arc, okay? So here we are, here's the bottom. And here we are here. Price is there. So we're trying to push up over, follow that pattern to this arc right there, which is above these lines. This, see that pink? I have to get that pink lines out again. So in other words, this bridge from here to here was missing. We missed it here. Then we had the break up over that at this spot. So that brings us to this point right there. So 115,975, if I go straight across, that's our current resistance. That brings up this triangle. Okay, so if we were to go straight up from here, we could fly through all of these arcs and angles and everything, and there's a potential right there to come out of that seam above that line. Likely not going to happen, right? I mean, unless something huge happens, we're not going to go vertical that fast, that quick, right? So then you have to take into consideration, okay, the arc that's the potential from over here, okay, swings up, and notice how it crosses 125, then this point, and then here's 138. So now, what can happen if we don't pass that arc and get over that resistance, angular resistance? What can happen is we come underneath this edge, okay, which would bring us into this lower quadrant, and we can fall down to the 107 and then fall underneath these curves. See, here's the pink curves I talked about from over here. So that is our angular arc that's resistant. So you have sharp angles, and then you have curve lines. And notice how right here this spiral goes this way, and it touches that angular line. This one goes this way, and it comes back underneath here to backwards in time, and if you continued that, it would touch that angle right there, which if you draw it upwards, it comes out over here, and that is your 125, right? So the point I'm trying to make is that there's a potential now to cross the 115.7. If we do, we can experience expansion to the 119 area, and then have resistance because the angles are going this way. You would have resistance up here, and then you have a pullback, right? So then you can burst up again. But we're in a very, very interesting spot with potential to climb from our previous all-time high to make a new one. Likely to happen between now and December if we can get that resistance over, because this line right here is December 3rd, right? That along that curve. So I have to turn the mic off. Okay, sorry about that. Okay, so now let's look at this ellipse. See how this ellipse comes down here and has its angle, right? Following right there. And so if you break out over that angular on this ellipse by this time on that candle, right? You get over that descending spot. So here's our triangle. See the point down here, 109. Then you have a rise, then a rise, and then a peak. Okay, now come down. Now, if this turns out to be where we cannot break this spot here, we can then fall back, right? And come, this is like I was telling you about a few minutes ago, where we would have caution again. And if you follow that ellipse, you can then flow out from underneath the bottom, because Bitcoin likes to follow symmetry. And that point down there is 110.7. Right, 110.7. See that? Okay. So those are our scenarios. We can rise here between the date we're at and what's this date? The 31st of October. Right here. If I go straight down on the 31st, that's where we are. So let's take a look at that with our candle. Okay, so here's our candles. Now that when I talked about this being a pole, see how this candle is right on that crossbar. So this particular candle can fill up and go across on this day, today, because this candle lasts from the 25th, and it has a new one coming on the 28th right here. So you see, if you go across, here's the topping of that candle there, right? And notice how that's on that curve. Now here's the next, another 3-day marker.